Hello, welcome to Todd Miller to the TV. Today's topic is cash for keys. I get a lot of questions about this from people. What's a reasonable amount? So I want to go over some different cash for key scenarios with what's reasonable. You're probably wondering, well, isn't there a set amount that I should get? And the answer is no. For example, if you live in a luxury home, so if you live in a home that's, whether you're a previous owner or tenant, if you live in a luxury home that's $1 million home, you are likely to get more money than if you live in a really small house. And the reason for that is because the reason that a lot of people will do cash for keys is because they want to ensure you move out, don't vandalize or take things. You know, we had a house that was a high-end home, and they took probably $30,000 worth of stuff out of the house. I mean, they took all the appliances, they took landscaping, they took like everything. And so cash for keys is financial incentive not to do that. Biggest check I ever saw was 10 grand, and that was for a $1 million plus home. I've seen little cash for keys checks, $500. I think it's the smallest one I've ever seen. Okay. Now, that being said, it also depends on the bank. For example, this morning I got a cash for keys on a house that was about $4,700. Well, that bank has a policy kind of nationally, the way they do their cash for keys. They go based on like a percentage of what they think the house is worth, something like that, right? That's a lot of money for cash for keys. There are other banks, $2,000 the max. You get $2,000. It doesn't matter the value of the house. You get $2,000 if you move out within a certain amount of time. If not, it starts going down on a schedule. So if you say, I can't move out in 40 days, I need 52 days, they do some math and say, okay, instead of $2,000, you're going to get $1,287, and you take it or leave it, right? The other thing to keep in mind, and just be careful about this, so let's say someone comes and knocks, and we had this was a situation, okay? Imagine this, you're in your house, and the house is actually bought at the trustee sale. It's not actually bought by the bank, it's bought at the trustee sale. But the bank thinks that they got it, and sometimes that happens. Sometimes it goes back to an investor, but the bank sends a real estate agent out to the house. Agent knocks on the door, offers cash for keys to the person, and let's say they say they'll give them $5,000, and the people say, well, we'll think about it or whatever, or they sign the agreement. Well, then the investor who actually owns the house comes and knocks on the doors and says, I'll give you $1,000 to move out, and they go, well, I've already got the signed agreement for $5,000 to move out from the bank. Well, there's a problem there because it's not a valid agreement. Because the bank doesn't own the house, they could offer you money to move out, but at some point they're going to figure out they don't own it. They're going to cancel that deal. The problem is you now have this hopes of getting $5,000. You probably have gone to an attorney, and an attorney's told you that's the going rate for $3,000 to $5,000. That's the going rate for cash for keys. Well, for an investor, it's not. Investors aren't going to pay that much. The reason why is they do an eviction pretty cheap. They can run an eviction for about $500 or $600. For them, they'd rather save a couple $100 than give you a few thousand. So what they're going to do is they're just going to do an eviction and have you removed from the house. They're all about the bottom line. So then you're saying, yeah, but what about if they trash the house? Well, they have insurance on the house. Investor buys the house, they put insurance on it. If you trash it, move out, they're just going to go to their insurance company and say, hey, they trashed the house when they moved out. The other problem you have is the bank may not do this, but the investor, because they know who you are, is likely to file criminal charges against you because it is a felony in Nevada to knowingly damage a house that has been foreclosed or is being foreclosed. And if you're the occupant or you're doing it with the intent of depriving the new owner of the value of the home, it is a felony in Nevada to do that. So the investor who who cares about the property a lot and who's going to they're probably going to go down and say, this was the person, they lived there, this is what happened, and it's a felony, they vandalized my house. So if you want to risk that, go for it. But so just keep that in mind with cash for keys. You can talk to an attorney all you want. Attorneys don't do cash for keys for the most part. A lot of them don't have practical knowledge. The people who know and have done this are the real estate agents. We've done hundreds of them. We've sold over 2,000 REO in the last 4 years, so we've clearly done a lot of cash for keys, and we know what the reasonable ranges are for a bank or for an investor. So just keep that in mind. If you're watching this because you're an agent, you're trying to advise a client, or you're just somebody out there who's saying, hey, how much should I get for cash for keys? It is negotiable to a point, but like I said, there's some banks it's $2,000. That's all they offer. They won't. That's their policy. They'll never exceed it, and some will go more. But for the most part, you have to make a decision at some point. You either take what's offered, reasonable amount, or that you wait for an eviction. And some people choose to do that. That's fine too. So anyway, I wanted to share that with you, since there's a lot of misconception out there about what a reasonable amount for cash for keys that you should be accepting or be looking at. One last thing. The cash for keys is paid to each adult occupant. So let's say that you live in the house and you rent out 2 of the rooms to tenants. Now technically, those tenants, that the bank is going to split that into thirds. So let's say they offer $2,000. What they're going to do is they're roughly going to take $660 each, $670 each, and give it to each. They're going to say who are all the occupants. So they're not going to give $2,000 each person. They're going to split the amount evenly. So that's typically how it works if you have multiple people. If you have a fourplex, it's different. So say you have a fourplex, so it's 4 units, and it's one building. They're not going to offer $2,000 for the whole unit. They consider each, like unit A, that's a unit, so that unit will get $2,000. Unit B, that's a unit, that unit will get $2,000. So it depends on the type of property that it is. But single-family residences and condos, that's going to be the limit. Anything that's an individual unit gets typically is eligible for that amount. That is my update, and I hope to see you on another video. Thanks.